Okay, in this video, I just wanted to cover a little bit about risk management days versus execution days, um, as I alluded to earlier. So basically, we could tie this concept into the market cycle or just use plain common sense to kind of make sense of things in the market on a day-to-day basis. So let's say we're in a trend, right? And we're near the start of the trend. So if we're near day one, which is right here, day two, day three, those are days where you're executing trades with size, the setups that you've been tracking, the relative strength behind them, and those are what you can classify as when you do your routines, you can classify those as execution days. So you come into those days and say, this can be a potential day where I will be executing trades. So I've planned XYZ, and I have a focus list, and if they trigger, I will execute upon these. Whereas later on, when we're expecting stress test, and we're expecting the market action to be a little more things are extended away from pivots, there's not much entries but nothing looks broken, and we're solidly into a trend. Those are the days you can call, those are basically what I call risk management days, right? You're managing your risk, you don't really have to take any actions, and you come into the day and you're super relaxed. You know that you don't have to act on anything because you're solidly positioned in the market based on the execution days that you had early in the market cycle. Now, let's completely forget the market cycle for a second, right? Let's say that we have a focus list, and we come into the session with that focus list, and we normally, if we just use plain old breadth metrics, right, and we say that percent stocks above 50-day or percent stocks above the 200-day, and we can use that as a gauge. But generally, when you're looking at the market and you're coming up with a focus list, if it's easier for you to come up with a focus list, then in those instances, it's easier for you to execute because you have a wide variety of pivots available. Whereas in other situations where you're trying very, very hard to come up with a focus list, right? Those are the times where it's likely, if you're not positioned well already, those are risk management days. If you're not positioned well and you're forcing it, you will feel that in your trading, and the amount of pivots and all of that you'll find into your focus list will be far less. So use that kind of mentality when you're coming in to kind of build yourself a system and say that, this looks like an execution day. I have enough pivots. I feel the market momentum behind me and things are about to get going, versus looks like, things are extended. The things that I was watching, I'm already in, or I missed and I need to wait for secondary pivot areas. So have that objective lens, and it will make your decision making a little bit easier as well, when you decipher between execution versus risk management days. The other thing that you want to keep in mind is you want to develop a feel for this. So if you journal some of these, maybe what we could do, what you could do on your end is, okay, day 3, it was my execution day. Day 4, it was my risk management day. Day 2, it turned into an execution day, or I planned it to be a risk management day, but then I ended up executing, and then that was a no-no, right? And if you log all those actions just with your market cycle, even, it will help you decipher, one market cycle to the next, or 1 year to the next, or 1 quarter to the next. You'll get better and better and better at your trading. So just logging that, kind of seeing that come through, on a day-to-day, week-to-week basis will help you kind of decipher, are you interpreting correctly, or are you on the wrong side of the market? And it will allow you to get incrementally better as time goes on. So with that, I hope this video was helpful. It was about risk management days versus execution days. You can, kind of determine that as you come into the session, or when you're doing your daily routines. You can track it with your market cycle and kind of label them and see how you're behaving, what you plan for, and see what the outcomes are. And as you do that more and more, you will get better and better. And it allows you to, get a little bit of less, stress on your trading. You'll be less stressed coming in. You'll be content with a plan that you have in place, and it will save you. And in my experience, it has saved me a lot of money because I come in, I know, I don't really have to do anything today. Just watch. If it's a stress test, if I'm expecting a pullback, I just, sit back, relax, just watch my pivots, watch my focus list. There's not much to do. Whereas some other days execution, you have to be super focused. You kind of watch the events in the market. You see, how your stocks are acting a little bit closely. And when you're executing trades, you need sharper focus coming in to the session. So I hope that was helpful. With that, we'll conclude here. If you guys have any questions, feel free to leave them down in the comments of this post, and I'll be more than happy to answer them for you.